Welcome back to Overtime. Stocks rallying today as the PCE price index came in lower than expected, and after Chicago Fed President Austin Goolsbee told CNBC that rates could fall further next year. Well, joining us now is former Boston Fed President Eric Rosengren, who said before this week's Fed meeting on the show that if he were still at the Fed, he would be voting against a cut. It's great to have you back on to bookend the week here, and we did get that hawkish cut. The market certainly reacted strongly to it in a negative fashion on Wednesday and even into Thursday. What do you think now, especially given the fact that whether it was Fed Chair Powell or a number of other officials, maybe ex-Goolsbee in the last 24 hours, there's been a lot of talk about concern about a reigniting of inflation, possibly tied to fiscal policies, which we don't actually know what those are going to look like.
Yeah, I think that's the big challenge right now is we really don't know what the fiscal policies will be. We do know there's a lot of talk about immigration, tax cuts, and tariffs, all of which directionally potentially could be inflationary. But we don't know the magnitude. We don't have any details. And some of them may be negotiating comments that may not happen at all. So I think there is an unusual amount of policy uncertainty. Usually monetary policy doesn't spend too much time worrying about fiscal policy because it tends to be slow moving. But a lot of the things that could be coming up shortly after the inauguration could be done by executive order. So I think in the next month or two, we'll start getting a little more clarity on what policies could occur and whether or not they really have much of an inflationary impact.
What do you think about financial conditions right now? Are they too easy?
Well, the stock market, even though it went down quite a bit after the Fed meeting, is still relatively high by historical standards. Obviously, Bitcoin, some of the other measures of kind of speculative desires to see prices go up are still fully valued. So I don't think it's particularly restrictive given the conditions that we have in financial markets right now.
So, Eric, given that, do you think markets are responding reasonably to A, what the Fed is doing, but maybe more important, or just as important, what a Trump administration is likely to do with policy? People might start reacting to likelihood before the policies actually start to affect the data.
So I think we've seen some of that just with the Fed announcement. So it wasn't a particular surprise that it was a hawkish cut. And I think what was a little bit of a surprise was the summary of economic projections only had 2 cuts for next year. And I think some of the language at the press conference indicated that at least some people were taking into account potential fiscal actions that could be inflationary. So I think it just elevated the concerns that if there are inflationary policies on the fiscal side, that monetary policy will have to react to that. So we'll see if they actually come to fruition or not. But I do think that if we get a set of fiscal actions that end up being inflationary, it will make it very difficult for the Federal Reserve to cut particularly as much as the markets were expecting prior to the last FOMC meeting.